Hey there, it's Tuesday, March 31st. Miles Pitcher from Superior Lending. Hope you're doing well. Let's run through a little update here. You can see right here the mortgage-backed securities chart. I show it to you, but it really doesn't mean a whole lot right now because rates are being guided by the lenders, meaning as we see rates improving right here, you can see how we came up to historic MBS levels. The lenders have held on to those improvements and not really passed them on to the borrowers. Rates are still fabulous. Look at this chart, but they're not as good as they should be. And I'll tell you a little bit about what's going on here in a minute with lenders and their capacity and things like that. But rates are fabulous, and we're telling our clients, hey, great time to purchase, great time to buy right now. I'll show you my topics today. In fact, I'll switch this camera mode. So first of all, we talked about rates. They're great. Government loans. So FHA, VA, USDA loans are all under severe pressure right now. Lenders are able to close them, but they are having a hard time selling the servicing off on these loans to the servicers. The reason being is that number one, there's a high level of people in these loans refinancing. When a servicer purchases a loan, their break even is typically 7 to 8 years on that loan of servicing it to break even on the money that they're paying to get the servicing rights. With low rates right now, servicers are losing money. Part two of that is servicers have an obligation to pay the owner of the loan, not the borrower, the owner of the loan, which could be like Jenny Mae. If the borrower doesn't make payments, the servicer still has to make payments. And that's a big deal. If you think about how many people are projected to be out of work right now and the unemployment claims have skyrocketed, the default rates are going to be huge on a lot of loans. Therefore, these servicers are still obligated to make payments to the owner, to Jenny Mae. So right now, servicers are saying, we're not going to buy these files from the lenders. And that's created a massive bottleneck, and it's creating some problems. So some of the changes that you're going to see because of this is, I'll skip to number 4, is our credit box. And this is changing hour by hour, lender by lender. We are starting to see, like in an FHA loan, they used to do 580 credit score. We're seeing lenders tighten up and say, we're only going to do 640 or 660. We'll go to 640, but you have to have 3 or 6 months of reserves available. We're starting to see them skinny down what they'll do on debt ratios. Maybe some are even dropping down to 40% from 50%. We're starting to see the interest rates on these government loans being raised up a little bit higher. They used to be quite a bit lower than conventional. Many experts are predicting that government loan rates are going to fall in line right where conventional loans are at and settle into that same spot. So it's this credit box and guidelines the lenders are just tightening up on to be conservative. Now, my tip for the week is for you guys to get a message out to your clients about the forbearance. I posted this on my Facebook a week ago or so, and I'll repost it below. Number one, tell your clients not to just stop making their payments. That could get them in huge trouble, okay? If they genuinely and truly cannot make their payments for some reason, they can call and request forbearance. But they need to understand that forbearance does not mean that their payments are forgiven. If they go into a 3-month forbearance and their monthly payment is $1,000 a month, they'll skip those 3 months, but at the end of the forbearance in July, they're going to have to make July's payment plus the 3 months they skipped of $4,000. They need to be very, very aware of this and understand. This is your opportunity to be an expert and help educate your clients on this, that they do not get to skip those payments. They're just pushing them down the road, and they will still have to make those. Let me know if you have any questions. I hope you guys are doing great through this whole thing. We continue to be busy. We continue to see opportunities in the purchase market. We have new files coming in almost on a daily basis of people going under contract on homes. So we know the business is still out there, and we know the opportunities exist. So have a great week. Thanks.